Well, Rory Green is Chief China Economist for TS Lombard, an independent investment research provider. Rory, welcome. For those of us who are not distinguished economists, why is a strong dollar a problem? Who wins? Who loses?
Well, the US wins, in effect, and it's a problem for the rest of the world, particularly those who have debt denominated in dollars, and for those that are selling things denominated in dollars. That's commodity exporters, iron, copper, gold, everything priced in dollars gets more expensive. If you borrowed in dollars, paying back that debt, of course, gets even more expensive as well.
Who's losing the most?
It's difficult to say. I think it's the big EM debtors in general that are losing the most. So countries like Thailand, others in Southeast Asia have quite large exposure to EM dollar-denominated debt, and they're the ones that are seeing quite a bit of pain ahead for them.
Why is the dollar, in simple terms, reaching these record highs?
It's pretty simple. The US is the world's largest and most consistently performing developed economy, particularly this year. If we look at Europe, China, Latin America, these economies are generally, if not slowing, weaker than the US, whereas the US is going from strength to strength. We've got high employment, high inflation, and the likelihood of the Federal Reserve cutting interest rates is being pushed further and further back. So it's the economy that's outperforming, and that means that its currency is the strongest in the world at this point.
Can you explain, though, why it's the Asian market specifically suffering so badly from this?
Yes. Well, the Japanese yen is coming off almost a decade of very, very low interest rates, which means that traders have borrowed a huge amount in yen and parked it in the dollar. And that trade is starting to reverse. It's becoming increasingly difficult to hold that carry trade. And that is pushing the yen to its weakest level in almost 10 years. Similarly, for China, for South Korea, these are very trade-dependent economies, and that's where we're starting to see their weakness moving as one, this Northeast Asian bloc, versus the dollar getting weaker through their currencies.
China's currency taking a bigger share of international payments than ever before. Is that trajectory unstoppable?
I think it's certainly got further to run. It's been driven really by two key factors. I mean, the Russia-Ukraine conflict pushing Russia primarily, but also a number of other countries to diversify the currencies they trade with and store assets in. And the other factor is a big policy push from Beijing, trying to denominate China's own trade in renminbi and to finance foreign purchases of Chinese goods in renminbi-denominated loans. And these two factors are going to continue to run, and I think the renminbi will increase its share of global financing and trade.
Rory, good to talk to you, and thanks so much for coming on the programme. Rory Green, Chief China Economist for TS Lombard, the independent investment research provider.